Hi everybody and welcome. This is Tushar Chande. Given the importance of Nvidia to the market and the huge fluctuations the stock has seen recently, I wanted to make a stock price forecast going out to Q4 of 26, which would be February of 2026. So let's see what my calculations show. A gentle reminder, past performance is not necessarily indicative of future results, and all my calculations are obviously speculative for the rest of the discussion. This is my best guess how prices will evolve. This is the Nvidia price per share. I'm expecting to evolve from say 125, 130 all the way out to something above $200 at the end of February 2026. So these are the quarterly reporting dates. So for example, the Q3 data are actually reported in November of 2024 and so on. And remember that Nvidia fiscal year starts in February 1, so it runs from January through January. So these are numbers actually reported by Nvidia themselves, and they're available on their website. I use the non-GAAP numbers to work with. And for example, from here they've given you the revenues, the gross margin, the operating expenses, and so the operating income, net income, so you can get their tax rate, and then of course you can calculate the earnings per share if you knew the number of shares outstanding. And then I looked at their forecast for Q325 and used that to build ahead. So let me show you what I did. This spreadsheet summarizes how I got my stock price estimates. So I started with data reported as non-GAAP earnings from the company. This is sort of their guidance of what could happen in Q3. And these are my estimates for revenues and costs and so forth based on what I understood from the company's discussions. There are two key things. Number one, the revenues, and I'll tell you how I assume those. And number two, I ended up estimating the trailing 12-month earnings, and I'm multiplying those by 50 to get to the stock price. So this 50 multiple is important, and it's on the conservative side. If you look at the historical data for trailing 12-month earnings PE for Nvidia. Now, in terms of revenues, I assume that in Q4 will be higher by 8% plus $2 billion. And then for all of 2026, I thought it would be up 10% each quarter plus $2 billion because the Blackwell chip will kick in. I assume that the gross margin will be 74%, and then the operating margin, etc., will stay the same as before. The expenses would increase at 10% per quarter, and then the shares outstanding would decrease because of their buyback, and of course I'm assumed some uniform rate of buybacks and so forth. So plenty of assumptions going into the spreadsheet, but we have to start somewhere. And remember that these are the quarterly reporting dates, and their fiscal year starts in January or ends in January. So essentially when I say Q1 of 2026, this is really May of 2025. This is the same table as before, but for the low estimate, and here primarily for the revenue growth, I've just assumed that it grows at 6% plus $2 billion for each quarter. And then that gives me a sense for what the price evolution might look like. So of course, there are a lot of assumptions in this, but this gives you something to progress, to estimate in terms of what the future looks like. And let me show you what my estimates look like compared to the industry estimates. The CNBC website has quarterly projections available all the way out to Q4 of 26. So I use these as a baseline or the average performance. And if you click on each of these bars individually, they also give you a range of values for the minimum and the maximum. And these are the best industry averages from analysts that have a whole lot more resources than I have. So this is the benchmark industry data. And then if you look at this column, this gives you the PE ratio for the trailing 12-month earnings, and they're using 52.9x, whereas I'm using 50x. So my estimate for the PE ratio is more conservative than what the industry is using. So that gives you a sense from where I tried to get the industry data to benchmark my results. So here I've plotted the Nvidia EPS forecasts from the industry in dashed lines. So this is the max estimate from the industry, this is the average estimate, and this is the lowest estimate, and you see that my calculations are somewhere in the upper half of the projections, but not wildly so. On this slide, I've converted the quarterly EPS estimates into trailing 12-month estimates. So it's a rolling total over the past 4 quarters. And then again, the solid red line and the blue line are my estimates, and the dashed red, green, and black lines are the industry estimates. So you see again that my estimates are well within bounds of what the professionals are estimating, with a whole lot more resources than I do, though I'm obviously a little more optimistic than the average forecast. So now it's easy to take the trailing 12-month earnings and multiply them by 50 to get the actual stock price forecast. Um, The industry estimates are in the dashed red, green, and black lines. My projections are these two lines, and they're on the optimistic side, but not wildly so. They're within the range of what the industry is estimating. And of course, they have a lot more resources than I do. So overall, my forecast may be a bit optimistic, but they're not inconsistent with what the industry is projecting. So this slide gives you the range of values from the previous slide, and you see the range of values increases because there's more uncertainty in the forecast as further out. Also, I've converted the labels into the reporting dates. So for example, the Q325 data will be reported in November of 24 and so forth till the Q426 data will be revealed in February of 2026. And you can see that generally we are in the 125, 130 range in November, and then out to about the 175 to 270 range, so 170 to 270 range in early 2026. Now, once again, a reminder that there are plenty of limitations in the calculations I've showed you. All of these could be wrong, and certainly the stock price multiples could be wrong. And my analysis does not account for the overall market conditions, geopolitics, monetary conditions, seasonality, and so on. So even though my estimates are in the general range of the industry estimates, there's a tremendous amount of uncertainty as we look ahead, and my assumptions could certainly be wrong. So having played with the spreadsheet, now let's look at the charts. This is the current chart of Nvidia as of Thursday, September 12th. You can see that Nvidia is trapped in a symmetrical triangle, and in general we expect prices to remain within the triangle until they break out. And in a symmetrical triangle they could break out to the upside or the downside. Of course, the previous analysis suggests that we should be expecting a breakout to the upside. So let's study the technicals a bit more. The first thing to note is that the breakouts from triangles do not succeed right away. So typically I have drawn a buffer of about $5, meaning you need to penetrate the upper line by something like $5 for it to be meaningful. And then I can also put a penetration band on the lower side to allow for some market noise. And the chart shows you that there's tremendous amount of overhead resistance in the 131 to 141 area. So there's resistance here, resistance there, and resistance there. Now, using technical analysis, we can use the height of the triangle from here to there as an estimate for the price range in the future. So I assume that we get a breakout in November after the election and before the announcement of the Q3 results. And to reposition this triangle here, then I get a price over there in the $170 range. And I can also use the price range from here to there and do a Fibonacci extension, which also gives us one of the potential price targets in the 171 or 172 area. So of course we don't know exactly when it's going to break out, but assuming that we could get a breakout sort of in the latter half of this year, then certainly a $170 price target is not unreasonable. I wanted to show you the Costco triangle breakout from last year just to show you that the process has its limitations. So initially we could draw these two lines for the triangle, and we'd have expected to break out in this general area, but you see that the prices continue to move out of the triangle. So in effect we had to draw a second triangle, and even then the breakout occurred almost at the end of the triangular pattern. So this is an example of where the market could redraw a triangle and the breakout could occur past the initial convergence or tip of the triangle. I wanted to revisit the Costco daily data from the previous slide and emphasize the value of the chats indicator in the lower panel. This is the Chande Absolute Trend Strength Indicator. It combines many different time frames and multiple indicators into a single composite indicator or oscillator with a range of plus 100 to minus 100, and strong uptrends or downtrends occur when it's above plus 75 or below minus 75. So the vertical lines highlight the bars at which Costco was about to test the upper line of the triangle or exceed it. And you see that in each of these instances, the chats indicator didn't quite rise above plus 75. And finally, when we did get a successful breakout, the chats indicator was above plus 75 and even approaching plus 100. So we are looking for confirmation of the breakout using the chats indicator. So I wanted to show you how I calculated the buffer zone to give a buffer to the upper trend line of the triangle in order to avoid false breakouts. So this is the Chande arch indicator or the adaptive regression channel. I've drawn them with a 60-day channel which goes from sort of the peak here to the value on Thursday, and then I use the channel tool, the using Alt N, the channel extension, to sort of draw the channel between these two extremes, which are plus or minus 2.5 sigma, and draw it out here. And then I just drew this line, extended it above the upper line to give me the buffer zone, so that prices would have to rise above this upper band to convince me that this was a successful breakout from the triangle. And of course, I could do a calculation down here with the arch indicator to get a lower buffer. So back to Nvidia daily data. You see now where the values for the upper buffer and the lower buffer have come from. And this is the chats indicator. And in the first major retest of the upper line of the triangle, you see we did not exceed 75 for long. And we could continue down here. But if there is a breakout somewhere here, for example, or here, I would expect to see a confirmation from the chats indicator and movement above this buffer line. So to summarize, this is the stock price forecast. The solid lines are my forecast. The dashed lines are the industry forecasts. This is the max in the industry, the average and the low. And Q2 26 would be August of 25. And if I check the average forecast from the industry, it's at about $170. And then here we have the technical analysis based forecasts. I have two tools here. I have the height of the triangle, assuming a breakout in mid-November, and then the Fibonacci extension, and both give me a price target in the $170 area, which is consistent with the value from the previous slide for the average of the analyst forecast in August of 2025. So we seem to be in sync on both the fundamental analysis as well as the technical analysis. So I hope you'll like and subscribe and share the presentation if you liked it. The tools I used are at TrendSpider.com, and this is the link to get you there. Thank you for listening and have a great day.